David, it's a funny kind of time that we find ourselves in. Asian markets bouncing back into bull market territory yesterday. There's a lot of ebullience that came through overnight about, whether we're seeing therapeutics that are showing more efficacy, the idea, or maybe it's a little bit more of an aspiration that we could see a vaccine by the end of the year with this Operation Warp Speed. Is there too much enthusiasm that we're, over the worst of this?
Yes, if this was just about the virus, there's definitely too much enthusiasm. But I think the other thing that's going on, certainly in the U.S. market, is that the parts of the economy that are most exposed to social distancing are actually a smaller part of the U.S. equity market. I think that's one of the things that's protecting the equity market. And then when you've got rates so low, it's very hard for long-term investors to really commit to the bond market. And I think that's really helping the stock market weather this this storm. But if it was just the virus itself, the market ought to have gone lower.
Right. So at what point, how strategic are you at this point, given that there's a great deal that we still don't know as to whether we might see another market bottom? What opportunities do you see, particularly as we look at valuations not exactly being bargain basement levels?
Well, no, the valuations aren't at bargain basement levels in the U.S. I do think that stocks outside the United States are cheaper, and I actually think emerging market stocks look relatively cheap in this environment. We realize that that the whole world economy is basically on halt until they have a vaccine for this virus. And I realize it's nice to have treatments, and we hope that the fatality rate comes down. But the reality is, whatever governments say, people are not going to go back to their normal activities until they feel safe, and we are a long way away from that, at least in Europe and in the United States. However, in countries like Korea, Taiwan, New Zealand, Australia, Hong Kong, China, perhaps, it seems like the worst of the virus problem is over, and that should allow East Asia to do much better than the rest of the world in a rebound.
Despite valuations being better in emerging markets, how much does it matter that perhaps in some of these economies they may not have the fiscal room and the monetary policy room to do more if things deteriorate because of the virus?
Well, that is a problem, obviously, and I mean it makes it tough for the population. But conversely, a lot of these emerging markets have younger populations, and if you look at how this disease is attacking very old people, I think Japan is really under much more threat from this kind of virus than a country like India, for example, which has actually got a much younger population. So I think it cuts more than one way here, and I do think that this is a relatively short recession. I mean, it's very deep, but I think we're talking about 2020 is the year of the virus. 2021 is the first year of recovery. By 2022, I expect that the global economy will be booming again. So if you're investing in stocks for the long run, I think it's worth taking a position in emerging market equities right now and just riding it out.